UPI at 10 latest news. UPI has completed 10 years since its launch, now accounting for 86% of all digital transactions in India. But explosive growth has piled up costs for the payments ecosystem, reviving the debate on who should pay for it with a recent amendment to the Payments and Settlement Systems Act, 2007 now permitting merchant fees on UPI payments. How UPI came about. The RBI's 2012 vision document noted an average Indian made just 6 non-cash transactions a year, a figure unthinkable today. UPI was built by the RBI-regulated NPCI and the Indian Banks Association, with groundwork starting in 2012-13. It launched as a pilot in April 2016 and went fully operational that August. By 2025-26, India recorded 28,174 crore digital transactions, 86% via UPI, used by over 55 crore people through 703 participating entities. Early growth was slow. Even after demonetization in November 2016, adoption crawled. Monthly transaction value stayed under 10,000 rupees crore until December 2017. It took another year to cross Rs 1 lakh crore a month. A key barrier was the merchant discount rate, MDR, the fee merchants paid on digital transactions. Zero MDR, the turning point. The Nandan Nilekani-led High-Level Committee on Deepening of Digital Payments, 2019, recommended scrapping MDR for customers and small merchants, with government subsidy instead. From 2020, the government began subsidizing UPI/rupee transactions up to 2,000 rupees, capped at 0.15% of transaction value, shared between banks and payment providers. The COVID-19 pandemic then accelerated adoption sharply, as people avoided cash handling. Private investment fueled the boom. A Bank for International Settlements, BIS, paper noted investment in Indian FinTech spiked in 2019, driven by UPI adoption and big deals like Paytm, PhonePe, and again in 2021, post-COVID digital payment preference. Most investment flowed into companies offering payment services and point-of-sale infrastructure. Banks have been left behind. Two US-backed apps, PhonePe and Google Pay, together handled 80% of UPI transaction volume and 83% of value in July 2026. As per the experts, banks have missed the payments bus and can't match these volumes. SBI itself handled just 0.1% of UPI volume in July, ranked 4th among banks, behind Kotak Mahindra Bank, 0.6% share. A regulatory cap limiting any single player to 30% market share has been repeatedly postponed. The current deadline is December 2026. The cost problem. UPI transaction growth has been staggering, up 1,800%, compared to just 17% growth in card transactions since November 2019. This scale comes with rising costs, technology, banking infrastructure, and compliance estimated at around 20,000 rupees crore a year. Government subsidies for sub-Rs 2,000 transactions don't cover this gap. The case for reintroducing MDR. Industry voices argue zero MDR was right for driving initial adoption, but the next phase needs to create more value per transaction, including data-driven credit access for merchants and consumers. The industry is pushing for MDR of 0.3 to 0.6% on transactions above 2,000 rupees for large merchants. Such transactions form just 4% of person-to-merchant payments but account for 68% of total value, making them a viable revenue base without hurting small merchants or ordinary users. The next wave of growth. The Finance Ministry has said subsidies alone cannot sustain UPI's next growth phase. Domestically, growth is expected to come from rural and semi-urban areas. Internationally, NPCI is targeting greater cross-border presence. UPI already operates in 9 countries: Bhutan, France, Mauritius, Nepal, Singapore, Sri Lanka, UAE, Qatar, Cambodia. The India-Singapore UPI Pay Now linkage, active for over 3 years, is seen as a template, since traditional international transfers can cost up to 7% and take days to settle. Conclusion: UPI's decade-long journey from a pilot project to handling 86% of India's digital transactions is a genuine success story of financial inclusion. But sustaining this scale now demands a fairer cost-sharing model, one that funds future growth without compromising the accessibility that made UPI a global example.
Thank you for watching. Helps you in your UPSC journey. Don't forget to subscribe to our channel for more guidance and click the bell icon to never miss an update. Keep studying hard and good luck.